presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak YouTube update for August the 22nd, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap. You can get all of the information that I do, all the media work that I do. You can get all of the Compak media simply by going to compak.com/media. You can listen to the daily podcast, you can listen to daily radio broadcast, you can register for upcoming events, you can also get the weekly update, and obviously whenever I do one of these YouTube updates, you will be notified. So all you have to do is go to compak.com/media to sign up. Let's talk about the markets. I'm going to talk a little bit about that, the economy, where we are, look at the technical analysis, and the week ahead. Let's start with the market. We're in the August doldrums. You've heard me talk about this for the last couple of weeks, or really this month and starting last month, that August and September are seasonally not the best time of the year. Technically, we were getting to a point where the market was looking like it was topping out. We were also looking at the overbought, oversold indicators. Everybody was getting very bullish on the markets. Now we're getting some fear back. We've come back down about 5% in August. We saw the 19% rally from the March low to the July high. So now we're coming down a little bit. We're down about 5% in August, but I think again, that is just normal market volatility. September is also one of the worst months seasonally for the markets, but I think the market has already done enough in August to really try to start putting in a bottom, and I'll talk about that. The biggest question is Treasury yields. We'll take a look at these charts. I've talked about this 4.33 area, and the yields are starting to go up. This week, the biggest news is going to be the Jackson Hole Symposium. That is where all the presidents of the central banks from around the world, they get together in Jackson Hole, they discuss economic policy, they look at what's going on in each economy around the world, and these are the most powerful economic central bankers in the world. And then on Friday, we are going to have Mr. Powell make a speech. I think the Fed needs to come out, Mr. Powell needs to come out and say, well, we think rates have gone up enough. We're at a point where we should be, because interest rates are really spiking. And if we get much above 4.33, where we are hovering right now, I'll look at the 10-year note chart in a little bit. But if we break out above that, that will really start causing some stress in the bond market. It'll start causing stress in the economy, start causing stress in the stock market. And it might break something as far as the economy is concerned. Something might go very wrong. And if that happens, it'll take a tremendous amount of time, probably a deep recession, to cure that. And it'll take time. That's the worst thing that the Fed wants. Now is the time for the Fed to come in and say, look, we think we've done enough, but we'll have to wait and see. But the rates are at a critical point. Looking at the economy, financial conditions have tightened. You can see since July. In August, financial conditions have tightened dramatically. The higher this chart goes, the higher the conditions. And here is the tight conditions. Here it was last year in 2022 in October. So we're watching this and seeing how tight the condition. The Fed is very much aware of it, and I think they don't want to do too much of it. Looking at the online, I'm going to do a webinar on the 19th. You can come and register. Then on the 17th of October, I'm going to be in Scottsdale. This is the chart where we made the fifth wave top in July, and I talked about that the market looks like it's topping out. We needed to get above 46.37. We did not. We got to 46.05, 46.07, and now we've started wave 1 to the downside. We've got wave 2 back up, and this is wave 3 that we've got, and then we might start wave 4 to the upside. Resistance is going to be right here at the 44.50 area. Today we were trading, when I did this, at 43.89, and then the support is right here, which is 43.28. We got to 43.35 last Friday, and then we popped up from there. I think we're going to come and retest this because this is a fourth wave and then we usually make a fifth wave bottom, or this whole thing, this correction will become an ABC. We'll have to wait and see. But I think we've done enough, 5%. Maybe you get 1 or 2% more on the downside. On the weekly charts, I've talked about 43.30 as the resistance. This is the 20-week moving average right here. We got to 43.35 last week. We're at 43.89 right now as we are trading this morning. I think overall 43.30 should be it. If we break 43.30, then 4,200 becomes the next target, and that's critical. And we might get there before this is all said and done. I don't rule that out. Same thing has happened to the NASDAQ. Fifth wave top, wave 1 down, 2 up, 3 down, and now we're starting wave 4 to the upside. 13,704 is the 20-day moving average. We're 13,513. 13,806 is the 50-day. I think we just bounce around here for another week or two. Same thing, 13,238 is the 20-week moving average. We're at 13,512. We got very close to it last week, kissed it, popped back up. But this is wave 3 on the upside, on the weekly charts, wave 4, and then we start wave 5 to the upside. But this could be next year. It could be later on this year. These are weekly charts. This is the T-note chart that I was talking about. This is the line at 4.33 right here, going all the way across right here. This is the line that I've been talking about. And we are right at 4.326 today. That's where we're trading. So we're right here, and this is a critical area. If we break out above it, then we could go quite a bit higher. And that could be a problem for the Treasury notes, for the interest rate market, for the stock market, and the economy as a whole. That'll basically push up rates another 0.5% without the Fed doing anything. The Fed realizes that they don't want this to happen. I don't think they want it to happen because it could create a problem for them. I know inflation is still at 3%. The Fed, as I've said for the last couple of years, you heard me say this 2 years ago, I thought the Fed would let the inflation run a little bit hotter than the 2%. Gold market, fifth wave top again right here. When we hit 2085, wave 1, 2, 3, 4, and we're in the process of putting in the fifth wave bottom. 200 data is 1910, and I think the market is still in the summer doldrums, but Friday is going to be interesting what Mr. Powell says. Those are my views. Those are my thoughts. Again, if you need help with your portfolio, go to compak.com, set up an appointment, come into the office or wherever you are. We can set up a Zoom meeting for you, and we can develop a plan for you. Or you can always call 800-388-9700. Go to compak.com or just call to set up an appointment. I'm Mo Ansari. I will be back with you at the same time next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.